What's going on, everyone? Welcome back to Sin City Crypto. My name is David. I'm joined with Robin, and today we are talking nothing other than CPI numbers. They came in over what was expected, but the markets did react differently than everyone thought. Well, let's not waste any time. Let's get right into it. CPI 8.2% year over year, down 0.1% when compared last August of this year to August of last year. So year over year, down 0.1%, but still 8.2% inflation here in the United States. This source from, of course, the U.S. Bureau of Labor Statistics. It is down from an 8.3 rise in August and a 4-decade high of 9.1% in June of this year. On a monthly basis, consumer prices edged up a larger than expected 0.4% after a 0.1% increase in August. Now, the core prices, which exclude volatile food and energy and generally provide a better measure of longer-term trends, which is also what the Fed looks at. They don't look at CPI, they look at core interest. And this is how they base their policy rates off of, if they're going to raise, if they're going to lower them. That came in, increased 0.6% from August following a similar rise from the previous month. Now, before I get into the next piece of information, which shows the breakdown of what went up, what went down, Rob, are you surprised? A, it didn't go up. B, it only went down 0.1% year over year compared to last month year over year. What are your initial thoughts here with the new numbers being recorded?
So no, I think everyone was in consensus that it was gonna go down at least month over month. We are still extremely overextended when it comes to inflation and where we're at. 8% over 8% is crazy. I think at this point we're starting to get used to, or we're numb to these high numbers. I mean, this is a third world nation kind of inflation, right? I mean, we're supposed to be the gold standard. We're supposed to have a stable currency, the world reserve currency. But yet everyone in this country, everyone that uses a dollar is becoming poor, with the exception of these large companies or that are ones that are gaining from inflation. Because with the onslaught of printing, over $6 trillion of fiat currency was printed over the last 2 years, almost a 4x in the money supply. And that has been funneled into the privileged individuals here in the United States, and also companies abroad as well. And people like me and you, we're the ones that are footing the bill. The concerning thing for me when you say, was it a surprise that it went down? Was I expecting it to maybe go up? Here's the scary part, is that core inflation month over month, or at least in the last 2 consecutive months, have went up. And
last month it was expected to go down.
Yes. So if the core inflation keeps going up, and the only reason that the CPI number in total is coming down, at least on a month-to-month basis, is because of energy costs coming down. This is backward-looking number. This is from September, and energy prices have went up recently in the last 3 weeks. And so energy prices reversing and going up, core inflation going up, I am extremely fearful that next month's CPI report is not going to be trending down. I am afraid we're not going to see, was it 8.1, right?
8.2.
8.2?
This month?
Yeah.
8.2.
8.2. I'm afraid we're going to go higher than 8.2. Perhaps we see 8.3, 8.5, 8.7. Who knows?
You think 9.1 was the top in June? I don't think so.
Well, I think it is. I think it is. So? However, I do think we can start flirting with that number again if energy prices go up. And we know that the cost of energy is going to go up in Europe with the supply shortages when it comes to natural gas. Winter is coming. We're not talking about Game of Thrones. We're talking about, energy commodities and the need to heat homes and the reliance on natural gas when it comes to Germany, France, and all of the other EU nations. The UK is looking, they're in a real dire situation as well. And
their situation is so dire that they're going to start subsidizing people's power bills.
They already have, or at least they have the blueprint in place. They know how they've confirmed that they're going to do it. They're going to put price caps when it comes to energy, and who's going to foot the bill? It's going to be the nation.
How do they do that? Money printer go. Brrr. That's how they do it. What's surprising to me, getting this CPI, the headline CPI, okay? Because core takes out energy and food, right? Those are the most volatile. So what's the biggest thing that goes into core is housing. And we'll take a look here in a second. But the headline inflation number, the CPI, the 8.2, I thought for sure, of course, this is backward looking. So in September, gas prices were lower. Here in Nevada, in Las Vegas, we did see gas under $5 for a very short period of time, but it was still there. What's going to happen moving forward when the US government stops releasing barrels of oil from the strategic reserve? And that's going to happen October 31st is the last day. On top of that, they're going to stop releasing those barrels, which helped Americans in any small way you can think of possible. But on top of that, they're going to have to go out and refill those reserves. And so now you're going to have more buying pressure, more demand coming into the oil space.
And
right?
OPEC, the largest producer of oil, the leader in the market, is cutting back
2 million barrels a day,
significantly. Not like we're easing up. They're like
2 million barrels a day.
They're seeing that there's a demand, extreme demand for oil. There's a shortage globally, and they're playing the long con here, and they're cutting way back. Pissed off a lot of politicians and the EU as well, and US. What is the blowback from that going to look like? Are we going to have more political issues when it comes to the geopolitical mess between Ukraine and Russia and the U.S., perhaps U.S. and the
Saudi Arabia?
Maybe they're.
That's what I'm saying.
Maybe there'll be some issues there as well.
That leads me to believe we have not seen the top of CPI. I think 9.1. I think we're going to get into the double digits. Is what I'm trying to say. So things are not looking great in the mid to long term as far as CPI inflation numbers. And I want to swap over and take a look at what were some of the biggest culprits, what came down, what came up. So this is, again, from the Bureau of Labor Statistics, so an official government website. You can see here is broken down month over month, and also on the very far right, unadjusted 12 months, that is year over year. All items, 8.2, went up 0.3% from August to September, and you can see that right here. Food stayed the same. Food away from home stayed the same. What are some things that changed? Energy went up by 3 points. Energy commodities went up by almost by 5.5 points. Gasoline went up almost 6 points. Fuel oil went up almost 3 points. So a lot going on here. What did come down is electricity came down, and utility, which is pipe gas service, that came down. But still, you look at these numbers year over year, 58%. Last September compared to this September, that fuel oil has gone up. That is ridiculous. On top of that, you go down here. This is all items less food and energy. This is where you get the core inflation number at 6.6%. And you can kind of see here, column for August, column for September. We saw a decrease in used cars and trucks. Those prices went down. New vehicle prices went down slightly month over month. And then medical care commodities, those went down. What went up is transportation services and medical care services, and shelters stayed the same. Is there something that kind of jumps out at you here, Robin? From month over month, right?
I mean, you pointed to it, and we were talking about it. It's the fuel and oil there. And as you see, we were at 11% in July for fuel and oil, then 5.9, now 2.7, and we had a big run up in the price. And so if the core, which has been going up, continues to go up, and we get a reversal on oil, man, I'm telling you, we're going to print 8.5. And what do you think? What do you think? What do you think is going to happen to the markets? I'm not even talking about crypto. I mean, I am talking about crypto, but I'm talking about markets. What do you think? The S&P 500, the global economy, economies around the world.
I think the bigger question is, what's the Fed going to do? Guys, there's
they're
only
gonna
so
stay
much.
course, 75 basis points next 2 times. They were talking about 75, 50.
I'm saying going
75 2 times.
Going into 2023. There's only so much they can raise interest rates without collapsing not just the U.S. economy, but the entire global economy.
They still got a little room to run. They still have, and you know, we'll cross that bridge when we get there, but they got a little room to run. But it's safe to say, and you can pretty much assume now, that there is not going to be a pause in the interest rate hikes, right? You agree? And there's not going to be a 0.2%, 2.25% interest rate hike. And so the narrative for the last 4 months from the Fed is that inflation, target range, 2 to 3%. They don't care if they crash the markets, if people are unemployed.
There's a difference between crashing the markets, Robin, and literally ruining the entire
But the thing is
economy.
the expectation is 75 basis points anyways. So that's already priced into the market. And so it's not like they're going to crash the markets by going 75 basis points. It's already expected. It's not like it's going to be all of a sudden. So 75 basis points, chalk it in, bro. 75 basis points the following month, chalk it in. And national 30-year mortgage rate, the average, over 77%. Add another 1.5, 8.5%. Remember, I was on somebody else's show. I brought up 9% home rate on the interest for a 30-year mortgage. Got laughed at. Fast forward 2 months, 3 months. It's literally 1.5% away. And the expectation, 0.75 plus 0.75 to round out the year.
And I'll end the video on this, right? It's not all doom and gloom, okay? I know it feels like can get depressing if you follow this stuff too much and kind of see all the negatives. Here are some positives. With the baby boomer, the largest generation in the world, starting to retire, they've already retired, and this is very unfortunate, but you know, COVID took a lot of elderly lives. So what that's created is that's created a void in the working marketplace, okay? So there's currently more job openings than there are workers. So even if inflation goes a little higher, you have opportunities and you have chances to be able to go in. And of course, it's not ideal picking up a second job, especially if you have a family. But maybe you have a wife that's currently not working and she has to go get a job. What I'm saying is there are options. And then you got to look at what you're doing with that extra money. If there is any left over, what you're doing with that extra money. And when this thing comes crashing down, which it will, it'll be a generational buying opportunity. You hear that across a lot of analysts, a lot of smart people. And it's true. That's how the rich continue to get rich, and that's how they stay rich. And we will have that same opportunity as long as we position ourselves, follow the news, see what's going on, try to forecast, and be smart with your money. And tune in to Sin City Crypto Monday through Friday at 10:30 a.m. Las Vegas time, Pacific Standard Time, for our daily live show. We talk about CPI, inflation, everything crypto, and macroeconomics. Thank you guys so much for watching the video. On behalf of myself and Robin, we love you guys. We will see you next time. Enjoy the rest of your day. Peace.